So let's hit on it. Number one, Japan. Number two, the Russell 2000. And number three, our favorite, the 10-year bond yield on the downside. So again, looking at what happened in Japan last night, and again, it's an important context point to make. Why? Because as the entire world gets thesis drift in Europe, so they're long Europe because they thought that Europe was recovering. Now they have to be begging the Europeans for quantitative easing. Look at the output of Abenomics. So if you look at this morning's numbers in Japan, they do have inflation. So inflation up 3.4% year over year. But what they don't have is this thing called growth. So again, inflation is not growth. Ludwig von Mises taught you this. Hayek taught you this. I taught you what they taught you about this. And at the end of the day, what did the Japanese get? Get this. Household spending down 5.9% year over year. Housing starts down 14.1% year over year. This is not a teleprompter. I actually know these numbers because they're so bad, they're easy to remember. Again, this is horrible. You know, the only thing almost worse than being long the Russell 2000 in 2014 is being long the Nikkei, by the way, which is down 4.4%. So now back to the Russell. Now the Russell's a fantastic kind of example of storytelling because, of course, everyone's like, well, look at U.S. stocks. Look at the stocks. I mean, look at the stocks. I mean, give me a break. Look at the TLT, baby, which we'll get to in a second. The Russell 2000 is 0.0 for the year to date. Now, last I checked, that's not a bull market. And versus bonds, it's horrible. You know, being long U.S. domestic growth expectations isn't as bad as being long Japan, but it's pretty darn close at this point. Final point, which I already made my point a couple times, which is an easy point to make. As global growth slows and as U.S. growth slows, what do you buy? You buy the long bond in TLT terms. So again, that's how we do it. And we obviously have fixed income subscribers who buy just the 30-year bond. They buy the 10-year bond. They buy any bond because bonds are outperforming stocks on an absolute and on a risk-adjusted basis. Don't forget, you don't have to deal with kind of like the fish flipping outside of the boat type stuff, being long the IBB or, yeah, you know me, whatever it is out there. Year to date, TLT up 17%, and that's not including the dividend. So again, a fantastic year to be long of growth slowing in the U.S. Those are your top three things.